On the show this morning, we shift our attention to the Nigerian FX scene with BDCs, Bureau de Changes, being the center focus today. June 3rd was meant to be the deadline for the recapitalization of BDCs in Nigeria, but today is June the 13th, 10 days later. When we are back from the break, we are going to be expounding on the BDC recapitalization. Welcome to Economy and Markets, where we give you a comprehensive breakdown of market and economic activities. I'm your host, David Olujimi. So in May 2024, the CBN released a comprehensive set of guidelines for BDCs, including one on their minimum capital requirement. According to the guidelines, Tier 1 BDCs had a minimum capital requirement of 2 billion, while Tier 2 BDCs had a minimum capital requirement of 500 million naira. Existing BDCs were given till June the 3rd, 2025 to raise this capital. However, as of June the 3rd, it is reported that only about 5% of existing BDCs have raised these funds, leaving the fate of the remaining 95% hanging in limbo. Apart from the recapitalization, the CBN guideline was a 52-page detailed document detailing to the T how BDCs are expected to operate in Nigeria. The issue now is, are these BDCs at the risk of closure? Undoubtedly, BDCs are like the engine room of the retail FX scene in Nigeria. They are basically the parallel market where the bulk of retail FX transactions happen in Nigeria. How will a closure of about 90% of the BDCs affect the exchange rate in the country? Can banks effectively step in and fill up their space? This and more is what we'll be discussing on the show this morning. On the show this morning, we have Alhaji Aminu Gwadabe, the president of the Association of the Bureau de Change Operators of Nigeria, ABCON. Good morning and welcome to Business Day TV. Good morning, Alhaji Aminu.
Good morning, Business Day, and happy Democracy Day.
Yes.
And congratulations for your rating.
Thank you. So, sir, we're going to start right away. The first thing I want to ask is, what is the update in your negotiations with the CBN? So there was a deadline that there was a rumor of deadline extension, but the CBN has come out to deny this rumor. So what's the update?
Well, the update is that the CBN have come out to disclaim the media preemptiveness of the extension of 6 months, and they made it clear that the deadline is sacrosanct. However, we are believing in the mantra of the central bank, diversity in collaboration in diversity. We are collaborating with them. We are talking, yes. It's for the Central Bank of Nigeria to come out with guidelines as our operators is to cast doubt. So this is where we are. We are not losing hope because we believe the timing is not malicious, because across the financial industries, the least we have seen as a tenor period within which you can recapitalize is 18 months ranging to 2 years. The microfinance bank recapitalized with a period of 18 months. The banks are recapitalizing with a period of 2 years. So we are hopeful that the engagement will still be a fruitful one. But as it is now, it is a deadline that has come to stay.
Okay. So basically, when you are saying it's a deadline that has come to stay, one follow-up question I have is, so what about those that have not yet recapitalized, that have not met that requirement yet? What is their fate?
That is the elephant in the house, okay, in terms of the problem. Like you rightly said, there are many challenges for many of us to meet up with the compliance with the deadline, ranging from the capital requirements, prudential guidelines, and some of the clauses even in the guideline. So it is unfortunate. It is an atmosphere enveloped by worries, sadness. I can imagine where millions of people are going to lose their job. 1 out of every 10 Nigerian, one way or the other, patronize a bureau de change operator, irrespective of whether it's licensed or an unlicensed operator. So you can see the quantum of what is going to happen, especially in terms of livelihood, in terms of employment, both direct and indirect employment. It's really a worrisome situation. Many of our members are sad, not happy with the situation.
Okay. Sir, I'm hopeful that the CBN is interested in the tribe of BDCs. Like, right. What are some of the ripple effects of this shutdown, of this portending shutdown of these BDCs? What are general scale? What are the ripple effects?
First, I think the objective is to ensure liquidity in the market. That is one of the main reasons why you have BDCs in the market. Okay. Also to help in closing the gap. 3, the BDCs remain the most potent, effective tool of the CBN transmission mechanism policy. The CBN, the bureau de change, the market is in 3 levels, where you have the first level being the regulator and the market maker. You also have the wholesale traders, which is the banks, and you have the retail end level, which is the bureau de change. So they are the gatekeepers, and they help in many ways in ensuring the achievement of the central bank policy. So shutting them down will mean creating disruptions in some of these roles the BDC will be playing in meeting the critical retail end needs of the market, because it creates competition. They also create price discovery. They create visibility. So shutting down will definitely affect liquidity, will affect their visibility, will affect their role in meeting, in ensuring the fulfillment of the central bank monetary policy in terms of foreign exchange stability.
This is a serious challenge that we may have to face terms with. But one question I have now is, what are the specific challenges that BDC operators have faced in raising this capital? What are some of the challenges they have come in contact with?
You see, unfortunately, we are worried because the model presently is like a bank model whereby it's been hung on the BDC neck. What I mean by bank model, a BDC is just like a bookshop. Yes. Most of us have traveled abroad. Imagine at the airport, you see just a small kiosk operating a BDC. So you are now challenging that BDC to say that come up with 500 million for a level, for a state level, and then 2 billion for national level. We made some researches internationally. We found that jurisdictions like Kenya, their capitalization is $50,000. That is about 90 million, thereabout. Also, we have looked into Uganda. Their capitalization is $15,000. I was in Paris 2 days ago. I entered into one bureau de change. I was trying to make some inquiries, and I was meant to realize, yes, there are into categories like what we are trying to do now, ranges between 40,000 euro, which is about also 100 million naira. So in other countries, European countries, there is no even restrictions on capital. In other African countries, also such is not adopted by them. So we believe the policy is not meant to strangulate the bureau de change. Yes, it's meant to ensure their capacity, to ensure their corporate governance, and that we must choose in what we want to achieve. Currently, the issue is not even capital requirement. It's about reporting. The Nigerian Financial Intelligence Unit, the central bank, lose about 5,000 suspicious transactions daily as a result of non-reporting of entities. This is a market that, apart from the retail, because there are some misunderstanding, which I want to make clear, there is the issue of generalization. Most at times, the media, the public, even you, I heard you talking about parallel market. Yes, parallel markets in FX means an unregulated market. The BDC are regulated.
Yes.
So there are many players in the market, and I want to also give the context here. Even the unparalleled space, this is a market that developed even before the independence of Nigeria, and millions of players are there. Recently, we have been seeing also in fintech, where they are doing FX trading, even though not part of their scope, but they do it as a treasury transactions. So it's good, like I said, we should look at reporting as critical than financial requirement.
So now back to the question. It seems like, is it that since the guidelines were made, I think since the guidelines were made, BDCs have begun to put in efforts to raise the capital. But what are the challenges they are hitting? What are the roadblocks that they are hitting along the way in raising those capital? We'll still come back to the question of the other requirements, because I read through a document and I discovered that there was a long list, including the use of now having to have a board and executive directors, non-executive directors, and all of those other things. But for the capital part, what are some of the challenges that BDC operators are reporting to the association as their challenge?
We all know it is a high jump.
Yes.
We're talking of how many percentage increase from 35 million to 500 million.
Wow.
So you can see it's not easy in an economy whereby, and two, you cannot get loan. Three, there is no intervention support. We have seen where banks were supported to at least make them operational.
Yes.
We have seen where airlines have been given intervention funds to continue their operations. And also, the regulation did not allow you to borrow money. So this is a big challenge. It's not easy to wake up and say you want to raise 500 million. Two, some of the benefits that you as an investor will look at in other clients in terms of margin, the margin is between 6 to 12%. And we are always forced to charge 1%. So with 1% on 500 million, you can imagine how many years it will take you to recover your money. So investors are worried that even the treasury bonds that we have is about 22, 25%, 27%. So why am I coming to invest in a business that I will be forced to make 1%? Also, the threshold. Our threshold, the max you can do is $5,000. Like I make inference in Paris, I was asking what is the minimum an individual can buy. They told me it's 25,000 euro. They hear the maximum is 5,000. So imagine how 500 million you cannot sell even up to $10,000 to your customer. That is really a very huge challenge. I've also heard you talking of some of the prudential guidelines. You know, it's like I said, to us, we are not a deposit taker. We don't grant loan. It's just a transactions that we are doing, and we make margin. So whereby you are coming to pay 500 million to do a bookshop transaction is really a very, very difficult one. We are also talking about the prudential guidelines. Yes, of course, the purpose of the policy is to enhance corporate governance. That is accepted, and it's a welcome idea. Definitely, like I said, the BDC, they are the gatekeepers, and their operation affects the financial industry generally. So regulating them, empowering them, enhancing their capacity is a welcome idea. But while we are doing that, like I said, we have to be circumspect of what are the unintended consequences that will follow after.
So one question I have, sir, because one question I have is ABCON now in are you negotiating with the CBN, or before those guidelines were made, was there any back and forth, was there any interaction between the association and the CBN? Because when you look at it, raising some of the concerns you have made, it does not seem logical that the CBN will put all of those kind of requirements on small, because BDC operators can also be termed as small business owners. Has there been any back and forth interaction? Was there any dialogue or any seminar or summit where you guys came together? Were you informed before these guidelines were put in place?
To be fair to the central bank, there are a lot of engagement. I can't even count the number of times we had meetings. But most of the time, we don't come out laughing. You know, when you have a meeting, closed door meeting, and you come out laughing, it means you tell yourself the truth. So the issue there, the CBN have been inviting us for engagement. We have been putting all these fears. They look at some of them. Before, when the policy came, there is even a compulsory deposit of about 50 million. So when we push our argument, like we are not a deposit taker, after putting 500 million, you are expected to keep also 50 million naira a compulsory deposit. They look at that one and they remove that clause, but every other clause remain. So we appreciate that. And like I said, we believe the engagement is a continuous one. They are human beings. And the present management of the central bank, like I said, they have what we call collaboration in diversity. Unfortunately, you know, the CBN is our lord, so to say.
They're your regulators.
They are our regulators. So we have little power. You know, one of the former chairman of a bank is saying, if you want to commit a suicide, you should have a conflict with your regulator. So we are not conflicting. We are following them with adequate respect and listening. And their doors are open to us. But however, we believe there is still a lot of things that the CBN can still grant us, especially the extension, so as to meet some of our strategy session. As soon as the circular is out, we'll move around the zone where we have our members, call for strategy session to look at the best way we can go around it. One of it is merger. You know, unfortunately, merger, not only in BDC sector, in the entire our side here, I mean the African side, you find it difficult for people to agree to merge. It's unlike advanced client, where you see there is merger, there is numbers of people owning businesses. Here, most people perception is a business that some people even inherited it for over 100 years in Nigeria. So it's seen as a personal business. So this is one of the challenges for mergers and acquisition. And like I've told you, you cannot look for loan. So we also propose whereby the policy also elucidated even having a PLC as a bureau de change company. So we look at that strategy and, okay, discuss with our members. We know many of you will not meet this date, and I mean, capitalization. How do we come together and ensure that you are all inclusive? Because it's about inclusiveness. So we agreed to follow that route as a compliance entities. The first we did, we made a visit to SEC, and we were told for them to allow us play as a PLC and also as a financial entity. We must get the no objection of the central bank. That is only when we can start putting structures. We have written to the central bank. We wrote reminders on that. This is one of our strategies to ensure there is inclusiveness, there is continuity of job, there is continuity of livelihood, there is continuity, especially of reporting. And also, we have given the CBN a proposal in terms of a unified market. You see, associations, industry self-regulators, we provide, some necessary support to the regulators, to the security agencies. So we put all that let us ensure that our members don't lose their businesses, and also you as a regulator, you continue to get what you wanted as a regulatory requirement, more especially in terms of reporting.
Thank you so much, sir. Thank you. We are far ahead of our time. But it's been a very positive and insightful conversation with you this morning on economy and markets. Thank you so much.
With a pleasure.
Yes, sir. So our viewers, we are leaving the table open for further information about the BDC recapitalization and the structures that BDCs will put in place over the coming months till the end of 2025.
It's a journey. It's a journey, not a station. So we expect some positive development.
Thank you, Alhaji Aminu Gwadabe, the president of the Association of Bureau de Change Operators of Nigeria. Have a lovely weekend. Good morning. I'm David Olujimi.